What's up everyone, my name's Eric. Welcome to my channel Redwood North Trading. Today's the 2nd of December 2020. Today's trade alert is in PTON or Peloton. I sold the 90 put for $2.10 credit. Before we go to the trade tab, let's look at the chart real quick for some technical analysis. Alright, so I've been following PTON here for a little while. What piqued my interest is that it had been in this sell-off since mid-October for a long time here, right? It was kind of coming down. It got outside of this longer channel, right? It blew off the top, came back down, was fighting that channel, but then they had earnings, and then also with the vaccine announcements. PTON is kind of what people call a COVID stock, where it's like stay-at-home stuff, right? Because they do the exercise stuff at home. So they actually took a big beating. They had this big gap down here. This purple box is the gap. The gap used to come down here to the top of this, and now it's slowly starting to fill that gap. I haven't adjusted it here in the last few days. So really this gap is actually up in this area. So that gap is starting to get filled, which I'm always of the opinion that larger gaps like that especially do get filled. Not always, right? But I've heard something like 70 or 80% of gaps in the stock price ultimately get filled. I don't know if that's accurate. With my non-scientific experience and opinion, gaps get filled on a regular basis, and 70 to 80% makes sense to me. They don't always get filled, but usually they do. Anyways, with that big sell-off here coming down here and then this big gap down, it's now back in this long-term channel, which goes much farther back here. I mean, this is way back in early 2020. It's been slowly going up. Also, what leads me to believe this won't go much lower, there seems to be real strong support here, you know, from, what is this, like $95, $96 up into this like 110 range. You know, you got support here and here and here. You know, all this is kind of going up. It's staying in this channel. Then also over here, you know, at the $100 range, there's real strong support over here way back in like September. Also, on top of that, you come down here to the MACD, you know, you had the big sell-off down here, went negative, went red, came down, and now look, the last 3 days have turned green. Everything's starting to trickle up. RSI is in the middle, which is kind of what you would expect at this point because it's starting to recover. And then lastly, the 20-day moving average is this blue line right here. It's very common for stock prices to kind of hover around that, and this is no different here, right? I mean, it kind of gets here, goes up and away, trickles back to it, up and away, comes back, right? It's been doing this for like a whole year. And right here it got really separated, right? And then it came crashing back down, which is no surprise in my opinion. And then here, when it broke far down, it got separated from the 20, and now it's slowly working its way back, and it did. And then a good sign of recovery is that if it can get above this 20 moving average and stay there. So you had 1 day above, which is great, but in my opinion, you need at least 2 days to confirm that it's going to hold that line, if not 3. So then the second day, it went down and it tested that line again, the 20 moving average, and it held, it closed above. And then sure enough, this actually gapped down to start the morning, but it's been going up ever since, and now we're above yesterday's highs even. So in my opinion, you put all these factors together and it looks really strong. The PTON isn't really going to go lower anytime soon. Obviously, you never know if there's some big vaccine announcement again. You just never know. Obviously, no one can tell the future, but from a technical standpoint, PTON looks poised to either stay the same roughly or head higher, and that's exactly what I want if I'm selling a put. I want the price. I sold the 90 put here at $2.10. When I opened the position, the stock price was at $115.25. It looks like it's just slightly below that right now. So when I sell a put, I want the price to stay high, right? Because when you buy a put, you want the price to go down. Well, I sold this, so for me to make money, I need it to go higher. If it goes higher, I'll get paid faster. But this can just go totally sideways, and I don't care, because eventually time decay will suck value out of that option that I sold, and I'll get paid. It can even come down, right? It can come down. It just can't go through my 90 put. If it goes through here, then I'll lose money. But it can go sideways, it can come down a little bit or it can go to the moon up, right? And I get paid in all three scenarios. And that's what's great about selling, where if you were buying this option, the only way you're going to make money is if this price goes up. And sometimes it has to go up significantly depending on what the situation is. Because when you buy options, time decay is working against you and sucking the value out of your option, which you don't want. Where when you sell the options, time decay is sucking the value out, which is exactly what you want. All right, I think that covers the technical analysis. Let's go look at the trade tab real quick. Here we are in the trade tab back in Tastyworks. Sticking with my normal entry guidelines, I'm looking at the 30 to 60 day window. And really the 45-day window is pretty much ideal. Right now we're at the 44 days, so that's great. Went here. I sold the 90 strike right here for $219. That puts you at the 14 delta. When I opened this a little bit ago, I think it was at the 13 delta, which indeed it does look like the price has moved against me just slightly. I sold it at 210. It's now up to 220. So if you're following along, that's great. You can get even a better price than I did. This leaves you with an 82% pop, a 93% P50. Your max loss is $8,700 and some odd dollars. If the stock price goes to zero, that's what you would end up losing. But is PTON going to zero anytime soon? Probably not. So realistically, your max loss is going to be a lot less than that, but theoretically, your max loss is much higher. And then PTON has a medium to low buying power effect of $900 required for each contract. So if you want to define your risk because you have a smaller bank account like $2,000 or $5,000 or whatever, or you just don't like the risk of the undefined risk trades, you seem to buy a farther out of the money put as protection. So we sold the 90, we're going to buy the 85. That leaves you at 79 cents here as a credit, but when I do a vertical spread or an iron condor, I like to collect more like $1. So that just means we need to take a slightly more aggressive strike to collect more money. So we'll move this from the 90 to the 95 strike. That puts you at the 19 delta. And then we'll move this closer as protection. And there you go. You collect $1.09. You're at the 95 and 90. And then this keeps us within the 15 to 30 deltas as well. You're at the 19 and the 14, which really this is the one that you're paying attention to because you don't want to be selling like a 39. So 19 obviously is within the 15 and 30. You're collecting $1.09. This lowers your pop a little bit at 77% and your P50 at 80%. That's because you have to go slightly more aggressive, right? You're at the 95 put here instead of the 90. So your pop and your P50 go down a little bit. For some reason this isn't updating properly. Your buying power effect is now going to be locked in at roughly $400. And then your max loss would also be roughly $400. I guess for some easy math here, if we lock this in, say you sell this for 110, your spread here is 5 points wide. So that would be $500. If you subtract 100, that's $400. Subtract 10 more, that's $390. So your max loss would be $390. And your buying power effect would also be $390. And those would both be locked in, and they will not fluctuate like a naked premium trade would. Whether I do the naked put or the vertical spread, I look to take profits at approximately 50% of my max profit. Here on this 110 spread, my max profit would be 55 cents or $55 per contract. If you want to be more conservative, you would take it at like say 40%. If you want to be more aggressive, you would wait for like say 60%. I don't really recommend going much higher than 50%. With that being said, I always place closing orders ahead of time at 55% of my max profit. And if I get a lucky quick move, then boom, I get an extra 5%. However, most of the time I manually close the trades right around 50%. If I don't like the setup or think something might change, I'll take profits earlier in the mid 40s or low 40s or sometimes even sooner. So it all just depends what your comfort level is with risk, how much money you're trying to get, what kind of return on capital you're trying to get. As I've said before, everything is kind of flexible with your personal preference. Personal preference reigns supreme in just about all of these things. I think that covers everything for this trade. Let me know if you have any questions. Either way, I will see you in the next video when I close this, or if I have to roll it or adjust it or whatever, I will let you know either way. Thanks for tuning in, and I'll see you in the next one.